everyone. Welcome to another live trade trend session. This is Richard Van Rich here with Jeff Tompkins, Craig Ward in the chat box. We're really excited to have you guys with us here tonight. Got a lot of great information to go over this evening. Since we got a lot of folks on, we got a lot of things to go through. We're going to go ahead and get started right now. This is the first time on one of our events. You'll notice that your microphone is muted. That's so that you can hear Jeff talk. There is time throughout the event tonight where you can ask questions, put those in the chat box and the Q&A box. Those throughout the evening. So before I bring on Jeff, I want to make sure you guys can hear me and you can see my screen. You guys can just type 1 in the chat box. Let me know you can hear me. Let's see. All right, Dave, folks. Okay. Just want to make sure. If you have to hop off for any reason, don't worry. This is recorded and will be available later this evening in the members area. So before we get on, Jeff, just want to go over a disclaimer to saying that trading securities and options involves risk. Prior to buying and selling an option, investor must receive a copy of the characteristics and risks of standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to the time-critical nature of trading, broker fees, and activity of other subscribers, there's no guarantee subscribers will mirror our performance, and performance numbers shown are based on trades users could enter based on the trade signals. All right, with that being said, let me hand it over to Jeff. So Jeff, if you want to grab the screen.
All right, got it. Can you hear me?
Yeah, I can hear. And one more thing, guys, if you have any questions about your subscription or any questions about anything related to your account, email support@altostrading.com and we'll get to those in the morning. That's it.
All right, I'll take it from here. Thanks, Richard, and welcome everybody. Hey, Barbara, Brian, Carlos, Dave, Dennis, Ed, George, Jake, Keith, Scott. Good to see you, Scott. Terry, Sebastian, Rodney. A lot of people on tonight with us. Thanks for joining, and it'll be worth your while. We've got some fun stuff to cover. For the agenda, we'll first start out welcoming our new members. We've had some new members join us from some recent events that some of you also may have attended, the Mad Hedge Fund event, as well as the Market Madness Summit. So welcome to all the new members who joined us from those. We'll start out by going over our market overview. Today's an interesting day to look at. We had a what's referred to as a bullish reversal, which is interesting because it was off a major level on the S&P. So we'll take a look at that, map out our levels, see where we think the market's headed. And we're going to do something kind of fun tonight. We're going to combine another indicator with trade trend to help you guys hone in on your entries and fine tune your entries to identify better opportunities and also weed out the signals that may not be as high probability. So I think you guys are going to get a lot out of that. And make it easier for you to find the really great signals from trade trend. We'll try to do a live trade in the demo account today too, if we can find something in the futures markets just to demonstrate the signals. And so when the time comes, we'll get to that. And then we'll also have an opportunity tonight to look at any stocks or ETFs or Forex or futures that you guys want to look at. So I'll let you know when we get there, and then you can put some tickers in the chat box. We can take a look at those. And I think Richard mentioned if you do have questions during, just feel free to put those in the chat or the Q&A. Some of them either Craig or Richard will answer directly in the Q&A, or they may interrupt me to answer so everyone can hear that, or if it's something I need to demonstrate in the chart or whatever. But we will also wrap up with a Q&A in case there are any lingering questions. So, all right, let's get over to our charts and start with our market overview. So as I mentioned, today we had a bullish reversal, which is basically a pattern where you get a lower open than the previous day and then a close higher. And that's usually a pretty strong reversal pattern in bullish sentiment, especially after a down move. If you get this kind of one of these candles in the context of an uptrend, it's usually not quite as significant. But if it's off a major level, or if it's after a move down, it can often signal a potential reversal in the trend. And what I was actually going to do is look at the Fibonacci retracement from the low here back in the beginning of the month to the high to see if that also coincided. And as I suspected, just by eyeballing it, it does. So you'll notice here that also the candle today reversed right off the 50% level, 50% fib level, which just lends more weight to it. And then as we map out our support levels, you'll see that it also coincides with the half century mark at the 3850 level. So we've got a lot of confluence here, indicating that the sell-off we've been in over the past week or so may be stalling out and reversing. And then the other significant thing that happened today was the close. Not only was it in the upper third of the range of today's price action, it was also above the 3,900 level, which is a major century mark. So again, more bullish sentiment there. Let me go ahead and get rid of the, oops, just go ahead and get rid of the fibs there. And then let's look at our levels. Zoom out here a bit. And I'll mention the trade trend signal here in a second as well. So let's start down here because this was a significant low from back in the beginning of the month, and it resided near previous lows from end of January going back into the end of last year, beginning of this year. So we can kind of start at that 3,700 level that will really serve as our major lower area of support here. And if we look at the price action around that level, this one didn't quite reach it, but it was pretty close. And we had some support here back in the beginning of the year, and then major resistance back from December of last year that was broken through. And let me go here back to our line tool. So if we look at our half century marks at 3750, obviously we've got a little bit of support there, and then 3800, and we've got some more support here from back in mid or end of February. So the key thing to notice here, it's not a coincidence you see major moves off these levels. These are again watched closely by institutions. And then of course today 3850 was our rejection, and that's significant because if we go back to January, see where we had some resistance there, price rejected that level and traded all the way down into that 3,700. But today, instead of trading through it, we bounced off of it. This is our 3,800 level. 3,750 resistance. So, and then we closed above 39. So that's significant in terms of bullish sentiment. All right. So now what we want to watch for tomorrow and the coming week are the 3,900 level. So let's watch tomorrow what happens. Do we stay above 3,900? If we can keep above 3,900, then we're likely going back up into the previous highs around 3,950 to 4,000. We haven't hit 4,000 on the S&P yet. I think we have a real chance of getting up there this year, but we did just come out of another strong bull run over the past year, and a lot of my colleagues that I've talked to and other fund managers and things are main consensus is that we're going to see some choppy sort of price action for the remainder of the year. I don't know if I necessarily agree with that completely, but it's going to take a lot to push the market up to 4,000. I mean, we got a ways to go there to get up to 4,000. And if we do hit it, I think that unless there's a strong catalyst to keep us above 4,000, I think it's going to be a major level of resistance. So that's where we'd be, probably looking for sell signals from trade trend up here at the 4,000 level. But as of today, it's looking, fairly likely we could be moving back up there. This might be the end of this this retracement that started back on March 17th. So for tomorrow, watch the 3,900. If we close back below 3,900 tomorrow, this bullish sentiment that we saw in the market today will really be nullified, unless it's just a kind of a doji or indecision candle that's ranges inside this candle. Then that's not quite as significant. But if we see a strong move down and a close below the open from today, that would be bearish. So a close below 38.80. And just kind of a little trick to give you guys that I look at closely, mainly on daily charts, but really you could use it on any time frame, is to kind of gauge the near-term sentiment. Look for bullish price action, look for a close above the open of a previous bearish candle. So that sounds a little bit confusing, but just to demonstrate, here was the previous bearish candle, and see how the open was right here at 39.20. And interestingly, look what happened to the range today. The high of the day almost came up to that open. So in order for this to really have conviction behind it, we need to see a close above 39.20. And then conversely, if the market reverses back down tomorrow, let's say, 38.80 is our level to break on a close, not on just like a low range, but on the actual close, to make this turn the sentiment from bullish to bearish. So see how if we were to close below the open of a green candle, that's just the opposite of closing above the open of a red candle. So look for that, because often it can lead to near-term trends. It generally will play out over the course of the next week. So like, here's an example. Here was the open of a green candle, right there at 39.50. And then what happened? And that was on March 17th. And then on March 18th, we got a bearish reversal at a close below the open. And then what happened? The S&P went down. And then it happened again here. Okay. And this is almost putting us back in bull territory, but we need to see a close above the open of this bearish candle. And then right now, there is an open sell signal from trade trend, which I didn't personally take this trade, but had I taken it, probably would have gotten out down here today around the 38.50 half century mark, because especially as I saw it starting to bounce off that in reverse. But technically, it's still an open signal. With an entry would have been at 38.95. So if you'd gotten out around the half century mark, you could have picked up 40, 45 points yesterday and today. But this is one that if you had taken the signal, probably want to put your stop, above the open price of yesterday. All right, so that's sort of what we're looking at for now on the S&P. I'll pause there and see if anyone has any questions.
I didn't see any questions come through yet on the S&P, but someone asked what your thoughts are on NASDAQ.
Yeah, we can certainly look at the NASDAQ. Yeah, so it's interesting, because I'm glad whoever asked that did, because we've seen sort of a divergence of trends in between the major indices. Typically, they'll trade pretty closely together, but we had a recent correction in the NASDAQ. So let's take a look at that. Let's see here. I'm going to clear this out. And I'll just use the QQQ because it's the ETF that tracks the NASDAQ 100 and mirrors the NDX. So obviously, really strong, well-defined uptrend since the bottom back in October of last year. Got a nice sell signal here from trade trend. The high in the NASDAQ was on February 16th. Got a sell signal the next day on the 17th, turned into a monster move that trade trend captured from probably right around 329, traded as low as 297, but if using the trailing stops would have been taken out at 310, 311. So this was actually a textbook correction. By definition, it was a 10% move off the highs to the lows. So peak to trough, there was a 10%, a little more than I think a 10% correction. So this is a real correction. And that's, if you guys, if you ever want to kind of like figure out where to get in when markets are selling off, 10% from the recent all-time high is a good starting point, especially if you're using like dollar cost averaging or you're scaling into something. It can be good, and that's why we probably saw this reversal off of here, because a lot of large funds will come in and buy it at a 10% correction. And then if they're wrong and it goes beyond that, they'll scale in at lower percentages. But that's really why this, and if still map out the levels, obviously those are significant, and 300 was a major century mark. Actually, it would be a millennial mark even on the NDX. But you can see that it coincided with previous resistance right over here, and a 10% correction. So it's great if you can use look for confluence of other factors like support levels, percentage moves. Like a 10% correction would be a good place to look for an entry to the long side, or look for a buy signal from trade trend, which we got, but it was a little bit delayed there. Would have liked to see one more. But it becomes challenging because the volatility increased so much. You can see how wide the range of these candles are, and that makes it hard to take some of these signals. It was easier on the sell signal because the volatility was low and we had tighter ranges on each candle. But there was a bit of a little buy signal here. Had some nice legs to it, but reversed pretty quickly. If you're using the trailing stops, would have probably got around break even. Now, same thing with the S&P. We got a sell signal, but also a bullish reversal today. This one's not quite as strong as the S&P reversal, and I'm not feeling the faith in this one as I am in the S&P. Number one, the close was below the low of this candle. We've got a long way to go to get up above the previous open of the bearish candle, as I was mentioning to you on the S&P chart that I look for. So we still got close today at 311. We still got 8-9 points to go to get a close above that level. So this reversal candle is not real strong. Plus, it didn't really close in the top third. I mean, it's pretty close, it looks like, but definitely closed in the top half, but not real. We got really long wicks on either end of this. It's see this more of an indecision candle than with a little bit of a bullish bias than I do a real bullish reversal. So the Nasdaq's a little tricky right now. We could see, I'm kind of thinking we might see a retest of 300 at this point, but that could be a good, and then go maybe into some more of a range. So that could be a good entry point down here at 300 again, if it trades back down there, and then looking to trade it back up to the high of the range around 320. You could use defined risk strategies like a vertical call spread, or even buy calls at 300. You get a move back up to 320. That could be easily be a double, or possibly a triple, depending on what strike you go with and what expiration. That could be a nice options play right there, and certainly look for trade trend buy signals there as well. Hopefully that was thorough enough for the NASDAQ.
Yeah, that's it. No other questions.
Okay.
Overview.
All right. So let me see. Let's go back over to the S&P. So I want to show you guys, because often what happens, especially when you get in these strong trends, is unless you get something parabolic like this move up here without much of a retracement, those can be good sell signals, kind of counter trend. But when you get in like a really well-defined uptrend like this, typically these sell signals, either they won't trigger, like this didn't trigger, that didn't trigger, that didn't trigger, but these two did, and I wouldn't take these unless they're off a really strong resistance area, because and that's where this other indicator that we're going to look at tonight is going to really come in handy, because it's going to help keep you out of these some of these signals that are counter trend. And I'll also show you how to use it to help you time your entries on the buy and sell signals. It's pretty cool. So let me go ahead and add it. So this is a common study. It's available, I'm sure, in any charting or broker platform. And it's called the Parabolic SAR. Many of you have likely heard of it or used it. And basically, I'll show you the basics of how it works, and mention a couple ways that it's typically used. But you'll notice that it plots dots on your screen. And the general rule of thumb is that when price is above the dots, we're in an uptrend or a bull market. When it's below the dots, it's bearish, and the price is likely to go down. So you'll notice here that as price is going down, the dots are above. As price is going up, the dots are below price. Now, what causes the parabolic SAR to change? It changes here. I'll just zoom in on one of these so you can see it better. So it changes when price trades above. It doesn't have to close above. It just trades above the previous bearish parabolic SAR. So see here how price was below and dots were above. But on this particular candle on March 9th, price traded above the last dot. And so it reverses. That's why it's called, so SAR stands for stop and reverse. So parabolic stop and reverse. So so now once it goes above this dot, the dots start printing below. And they start printing where the previous low from the bearish SAR signals resided, which was down here. So that's how it works. It's pretty simple. It's nothing magical. It's not, and it's hard to trade by itself. How most people use the parabolic SAR is a trailing stop level. So like if you were to short, you could use that as your trailing stop. It can be pretty wide. So you'll notice like here was a buy signal from trade trend. Our trailing stops start typically where the parabolic SAR is, but you'll notice how our algorithm tightens it up very quickly. We're all the way up here where the parabolic SAR is way down here. And our trailing stop algo would have exited this long trade with a profit at 3,900, whereas you would have gotten taken out way down at 3,874, so 25 points lower using the parabolic SAR. Sometimes it can beat the trade trend algo, but most of the time the trade trend algorithm trailing stop is more efficient. But that's most commonly how the parabolic SAR is used, is for as a trailing stop. Trading off of the reversal is generally not profitable. So if you back-test parabolic SAR entries and just simply get in when you get a reversal signal and get out when it reverses, it's not profitable. It kind of looks like it would be, but it's not, unfortunately. So let's look at another way to use it with trade trend that can actually be really, really effective. So let's go back to where this trend started here in November. Actually, let's start even further back in September. We could even start here. I mean, there's a lot of spots I'm seeing we can start. This is a good one. Okay, let's start here. All right, so September 3rd, we get a sell signal from trade trend. And what happens on that sell signal? It reverses the parabolic SAR. So this thing had been going up, but we got a sell signal that coincided with the parabolic SAR switching to bearish. This is extremely strong. If you can find a parabolic SAR switch that coincides with a buy or sell signal from trade trend, it often leads to very significant moves. And obviously that happened here, right? Now let's look at this one, because we actually got, okay, and then these two didn't trigger. So here was a buy signal, sell signal, no trigger on those. But I would ignore this one. And then I would also ignore this one. I'll explain more in detail in a second, but mainly it's because of where it occurred in relation to the parabolic SAR. But here's a buy, and what happened? It was right when the parabolic SAR switched. And by the way, parabolic SAR is in no way built into that trade trend algorithm. It's just, this is purely coincidental, partly coincidental, but it has nothing to do with the algorithm. So that's kind of the nice thing about it. They're uncorrelated, but they are correlated in respect to giving strong signals and helping you weed out some of the trade trend signals. So this is another one, buy signal right off the switch from a bearish parabolic SAR to a bullish parabolic SAR. Look at this big move, huge. Now let's look at the next one. This one was early. So we're still above the parabolic SAR. Our trigger would have been up here. So using that technique, you would have missed the this nice move. So you might miss some. Now here's an interesting, so there is one exception to it occurring on the very first switch. So here was a buy signal on November 3rd, and we're still below. We didn't get the switch. See how the SAR dot's still above the candle? But this one would have qualified, and here's why. So on the trigger price, which was right up here, if it does trigger, it's going to, we know for a fact the parabolic SAR is going to switch. So as long as it's close enough, as in this case, is that high is almost right at the dot, to result in a switch in the parabolic SAR on this on the next candle, then that would be okay. So this would be kind of the exception, since this buy warning signal didn't fall right on the very first switch. And once again, huge move, really powerful move up. And that, I mean, this thing ran for a long time. Now, here's where we want to, I'm going to mention the other signals. So why wouldn't I have taken this sell signal? Well, we're way above the parabolic bullish SAR and price is above. So let me get my little drawing tool.
So Jeff, before you paint that on there, do you usually give yourself maybe a day or two wiggle room? Or do you like it to be pretty darn close, like same candle?
What do you like? Like that example I was just looking at? You mean?
Yeah.
Yeah, as long as the trade triggering would result in the parabolic SAR switching, like it would have right here, that's okay. That's the only case I wouldn't, you know, if the buy signal had come in on this candle, the previous one, it wouldn't have been a good one.
Yeah. Okay.
I don't know how to.
David's question.
Okay. Thanks, David. Yeah. So just use this. All right. I was trying to use the Zoom drawing tool, but I'm going to stick with let's see. It's giving me a little trouble. I need to figure out how to get out of there. There we go. All right. Anyway, so this signal, darn it. Would have ignored. Same with this one. Because the parabolic SAR can often serve as support, and so it kind of did here, see, and then the trend resumed. But then we get a buy signal. So we were already in a long trade from down here that would have been exited up here, but then we get a resumption, the uptrend. If you were using parabolic SAR as a trailing stop, it would have outperformed the trade trend algo trailing stop in this particular case. But here's a buy signal. And this one actually did not trigger. See how the entry would have been if price traded up above this candle. Didn't occur, but I wouldn't take this one for a lot of reasons. Number one, I don't want to take a buy signal at a high. But mainly, this came in way after where the parabolic SAR started. So parabolic SAR can be a really good indicator of how long a trend is going to run. And if it's already been going for this long, a buy signal this late after the parabolic SAR switch is probably not going to have much legs. Sell signal on the switch would have taken this one, but didn't trigger. This one was a buy signal right on the switch. That's good. Now we got a lot of volatility on the first trading day of the year. So it was just a small, if you were using trade trend trailing stop, it would have just been a little bit of a loss there. But if you stuck in it with like a vertical call spread or something with options, this still would have turned out to be a really nice move up. But here again, here's a buy signal. And we're already 1, 2, 3, 4, 5, 6, 8 parabolic SAR dots into the switch. So that's going to have a lower likelihood of having the legs to run up that this one back here did. So hopefully you see what I'm saying, that you want to get these ones that come in early. Here's another nice one. So this one is a similar example to what we just looked at. So see how it's still on the bearish parabolic SAR, but we got a buy signal where if the S&P does trade up and trigger at the suggested entry price, it would basically definitely result in a switch in the parabolic SAR. And another really nice move. And same thing here. This one was on a bullish SAR, but the dot's right there, and the suggested entry would have been kind of down here. So on a trigger, it would have guaranteed a switch in the parabolic SAR, which occurred on the next candle with the trigger. Massive move down. And last but not least, same thing here. Bearish parabolic SAR, bullish trade trend signal. If we trade up and trigger, we get a switch in the parabolic SAR to bullish. Big move up into 39.80.
That's really interesting.
Yeah, and so you can see, I mean, there's lots of these examples, but this is a great exercise to do. I mean, here was a really great one. Look at this one, or maybe we already looked at that one. Here's a good one. Parabolic SAR switch. See how the dot was above that candle? Now it's below. That's bullish. Buy signal. Huge move. Here was a sell signal. Didn't trigger. We got the sell warning, but price kept going up. It didn't go below and hit the sell stop limit order. But look at the move that resulted in. Here's another one. Buy signal on a parabolic SAR switch. Boom.
Dan wants to know, does this work just for indices, or does it work for equities, or does it work for?
Yeah. I'll go over. I was going to look at a stock here in a second. Here's another one. Parabolic SAR switch. So see here, it was bearish. Price was below the dot. We get a buy signal and a switch. Price is below the dot, or sorry, price is above the dot. Buy signal, giant move. You can find these over and over again. Yeah, let's look at. I was going to look at Micron. Let's see. Most of you guys know I love Micron. It's one of the main stocks I follow. But yeah, it works. It'll work when you combine it with, again, parabolic SAR by itself, no good for entering. Yeah, you'll get some wins, but it's deceiving the look of it, because if you number one, you get a lot of whipsaws. So like it works great when something's moving up very strongly, but you get tons of whipsaws. Like this looks like this switch right here looks like it would have been profitable. It actually would have been a loss. So it's a bit deceiving. And when, like right here, when price is getting choppy, these would have all been, if you just took the trade on the buy on the switch and then exited on the trailing stop switch, you would have lost all of these. So you don't want to trade the parabolic SAR by itself. Yeah, so we had a short on Micron. This would have made, what was the sell stop price? 84.50. So this would not have qualified because see, here's our suggested entry price, 84.50. And that would have still been above the dot. So a trigger wouldn't have guaranteed that we'd get a parabolic switch. You need the price to be at or below the dot on a sell signal. So this one came in before the switch. So even though this one's in a little bit of profit, it's 40, what it closed at 84.09, 41 cents in profit. Again, I'm not saying that these signals that don't occur with the parabolic switch are necessarily bad. I'm just giving you some tools to help really find the good signals. Okay, so here's a good example. Wouldn't take it. So see what happened here. We're bearish. We've got a bearish parabolic SAR because price is below the dots. I'll zoom in here a little bit. Price is below the dots. We get a buy signal, but parabolic SAR is way up here. So there's no way with the entry price being right in this vicinity that we would get a parabolic SAR switch if we hit the entry price, which we did on this one. And yeah, this, the entry price would have been down here around 89 and traded up to 95. So that's a big move. Not a bad signal, but didn't occur with a parabolic switch. Let's see. So I'm just looking for some ones that are right on that. Here's one that was right on. And those are really going to be your strongest. So see how price was below the dots, only for 2 candles. We get a switch. It's now below the candle. And we get a buy signal from trade trend. Huge move. Sell signal, wouldn't take it. Although it didn't trigger anyway. Buy signal, wouldn't take it. This one did trigger. Why wouldn't I take this buy signal? Because it's way too far into the parabolic switch. That occurred way back here on December 31st. And we're now January 19th on this buy signal. Too late. Wouldn't take that. So see how it can help you weed out some of these? Here's another beautiful one. Parabolic SAR switch. Go back out. Right here on November 5th. Massive move. So the entry here would have been around 55 a share, and this thing went up to 75 a share. So, 50% return just buying the stock. Or if you'd bought it, call options, that would have been, 1,000, 1,500% return on that one parabolic switch. This wouldn't take it. This wouldn't take it. It moved in profit for a day. It was a nice open profit for the day, but it stalled out because it was way too far into the parabolic switch. This was a close one. So here's another example of we got the buy signal when it was still bearish, but a trigger would have guaranteed a parabolic switch because price would have traded above the last dot there. And that would have been our entry price or greater. Pretty nice move, but just not as strong as when it happens right on the switch. And that one wouldn't have qualified, but still a good sell signal. Want to see. Here's one that did not work out. And I'm going to point something out here that also is another filter I use for this. So this was a sell signal on the switch, but it just kind of went flat. What would keep me from taking this one and probably choosing another better opportunity? Look at the distance between the parabolic dot where my cursor is and the open. Huge, that's roughly, let's see, 50, 6 points. These are generally not good. You generally want the price to be closer to the switch. And here's another really big gap. But like if you look back at some of these, that one, what was another good one? This one. See, you have your candle closer to the parabolic SAR dot. That's kind of more what you want to look for. You don't want a giant, gap. Those tend to not work as well. But this is like picture perfect right here. So it can really help you capture some really big moves. And if you really want to be disciplined about it and just only take the ones that are the buy or the sell, the buy is on the parabolic switch or the sell is on the parabolic switch, and it's fairly close to the dot. And those are, and you get you get the signal from trade trend. Those are going to be really great opportunities. All right, so I'll pause there for questions, and then we can look at some open up the room to Q&A and look at some charts and things like that. Let's see, what time okay, we're already 45 minutes in. I was going to try to do a demonstration of a trade, but we're kind of late in. I wanted to make sure I spent enough time on this, the parabolic SAR. So we'll do that on the next session. I'll just.
It's worth it though. I mean, this was like really, really powerful. I don't think you've ever gone over this in any of our sessions in the past.
No, yeah, we have looked at parabolic SAR in the past, but only as a tool for a trailing stop. This is the first time we've gone over how to use it as a filter for trade trend signals for the entry signal.
That's cool. I have a handful of questions. I'm gonna ask you the short ones first. How does this work on intraday 1 minute, 5 minute charts? Does it work on?
Yeah, so let's take a look at an intraday chart. Typically, I would say look for, if you're going to use it intraday, it's a good idea to do it on volatile stocks or stocks that have pretty significant ranges or moves for the day. Let's see.
I see your questions, Barbara. I want to ask them in a second.
Oh, do you know if Nancy's on? I think Nancy sent in an email. I'm not sure. Oh yeah, I see her. There she is. Hey, Nancy. Yeah, Nancy was wondering about entering contingent options orders on interactive brokers. Yeah, we don't have a interactive brokers account, Nancy, to demonstrate that on. But I know you can do it. You can do contingent options orders through interactive brokers. So you may want to just give them a call, or they might have a help book on their website. But I'm sure if you call them, they could tell you how to enter that. But you can do it. I do know that. So, all right. Sorry about that.
Yeah, no worries.
Go ahead. Yeah, so we're gonna look at intraday.
Yeah.
What time frame?
1 minute or 5 minutes, what they asked.
All right. So you're gonna have a harder time finding the trade trend signal lining up with the parabolic SAR probably on intraday, or the smaller the time frame you go, but it can definitely help you potentially weed out some of the signals. Let's go back to another day. So yeah, here's one, actually a couple nice ones. So we're still on Micron. This is a 5-minute chart. Here's sell signal. See how the bottom of the candle's right, touching that parabolic SAR. So in order for the switch in the parabolic SAR, price has to exceed it. So I'm looking at the low of this candle, which was at 84.85. And the price of the parabolic SAR was 84.85. So it literally touched that price, but it's got to go to 84.84 for the switch to occur. And that our sell stop order would have gone below the low of this sell signal. So it would have guaranteed a switch in the parabolic SAR if this sell signal triggered. So this one qualified, and that was a really nice move to the downside. Here was a buy signal, didn't trigger anyway. So even if you had tried to take this trade, it wouldn't have triggered, but I wouldn't take it. Here's a sell signal. This one did trigger, and it actually would have added just your profits if you added onto the position, but still wouldn't take that because it's too far into the parabolic SAR. Here's another coinciding trade trend buy signal with parabolic switch, and nice move. Let's see what the next one. This one was way too early. Too early. Here's one. Nice move. Here's one. Another example of the sell signal that came in 1 dot early, but our sell stop would have guaranteed a switch in the parabolic SAR. Nice move down. Again, didn't trigger this buy signal, but wouldn't take it. This one's interesting. This one came in late. And this maybe was what, was it Dave that asked, or I can't remember who you said asked how far in would you take it? But, well, let me zoom a bit on this. Let's see, was I back here? There it is. So here is the switch, but then the sell signal came in on dot number 2. This still worked out nicely. That would be another kind of filter you could use. I wouldn't go more than 1 dot in. So this one you could have taken. Again, if you really want the strong signals, you want to time it with the switch. I wouldn't take a signal any more than 3 parabolic SAR dots in, or 2, I should say. So this one, if you want to kind of take more trades, it will give you more opportunities, but you may, as long as price is pretty close to the dot, as it is in this case, I would say it's okay. You just want to be careful if the price is too far from the dot on the switch. This is a really, really good one. So this is a slightly different circumstance, but same principle. Here's the sell signal. In order for this parabolic switch to occur, because our sell stop would be below the low of the candle, it would guarantee a switch in the parabolic SAR. But on the next candle, it didn't switch. But candle number 2, after the sell signal, it did. So this is beautiful. This is perfect. And then huge move down on the sell signal. Buy signal, wouldn't take it. Didn't trigger anyway. See, helps keep you out of these. A little bit of whipsaw in there. Wouldn't have gotten in those. That one qualified. Wasn't a real spectacular move, but this is a really nice trade trend signal, but using the parabolic SAR filter wouldn't have gotten you in that one. Same thing here, using the 2-dot filter, even though this was a nice trade trend signal, would have not taken that. So don't kick yourself, guys. It will keep you out of some trades that would have otherwise been really nice trade trend signals. But if you're very methodical and disciplined and diligent with it, it's going to give you some nice opportunities. Here's a good one. Buy signal. Actually, this might not have worked because what would our buy stop limit probably, this is a wide range, so it probably would have been up in the, yeah, this was probably too far from the dot on the switch. Still a nice trade trend signal. So see how it kept us out of this? I mean, this would have been a winning trade from trade trend, but see how the sell signal was during a bullish parabolic SAR, and our sell stop would have been up here, so it wouldn't have guaranteed a switch in the parabolic SAR on the trigger, which it didn't. It wasn't until 2 parabolic dots later that the switch occurred, and then shortly after it reversed. So it would have, this would have been a profitable trade if you had taken it from trade trend, because the short entry would have been there and the exit would have been down here, but it wasn't much of one. And this is where it can kind of help you filter out some of these trades that may just be, you know, small wins or small losses, and keep you honed in on the ones that have the opportunity to really make big moves. So yeah, that's the demonstration on the 5-minute chart. I don't trade much intraday because it just becomes more challenging when you're having to move faster and stuff on these, make decisions and things, but should work for you on really any time frame if you can move fast enough and identify the switches and the trade trend signals and get your order in and everything. And it can, you know, certainly be automated if you use a broker that allows automated triggers like TradeStation or NinjaTrader. So typically I tell our students, you know, if you're going to automate, if you're going to trade something like this using multiple indicators like trade trend with parabolic SAR in a really short time frame, like a 1 minute or a 2 minute, it's probably best to automate it so it triggers for you without you having to do all the analysis and get your order entered and everything else. Because just a split second, you know, of delay could make a big difference in the bottom line. So. All right, so let's go ahead and take some suggestions if there are any stocks anyone wants to look at.
If you can pull back out to the daily on this one, on that 11-9 trade that you identified earlier.
11-9 signal?
Yeah, she wanted to know when you would get out.
Okay, so that's largely going to be based on the strategy that you're using. If you're just buying the stock, if you're buying shares of Micron, your 2 options would be on this particular signal, use the trade trend trailing stop. That would have gotten you out here. Actually, there's 3 options. Sorry, 3 options. Use the trade trend trailing stop, would have gotten you out up here. Still nice move. Parabolic, or just use the parabolic SAR stop if you're comfortable with the risk, because you'll notice that the trade trend trailing stop is much tighter. And the trade-off to that, of course, is that you might get taken out of a big move early, as happened here. The other option is to use the parabolic SAR if you're comfortable with the risk. In this case, it wasn't bad. It was not trailing too far below price, especially once you get into a big profitable trade like this off the bat. I mean, this thing moved really quickly off the bat, off the SPY signal. I probably would have gone with a parabolic SAR stop. And then option 3 would be to use a combination of the 2. You could use the trade trend to scale out of the first half of the position and then move your stop up to break even. So there's virtually no risk left in the trade, and keep the other half open and use the parabolic SAR because it's more aggressive at letting things run longer generally to exit the second half. And then you would have gotten out of your second half of your position way up here at $70 a share. So, you know, you're in right around 55 a share, out of the first half of the position, at around $60 a share, that's almost a 5% move. That would double an at the money option strike if you bought calls. That would have been probably around 100% return. This probably would have been 300 to 500% return. And but then if you're just buying shares, then you can go ahead and exit on the parabolic SAR, the other half of the position. So that's kind of the three options of how I would trade a signal like this.
All right, good. Let's see. Tova wants to look at Amazon.
Okay.
Specify on a time frame.
What time frame?
Didn't specify, so.
Oh, okay.
Daily.
We're on the daily right now, so we can take a look. Yeah, Amazon is really choppy. You see, it's just ranging. We haven't had a trade trend signal for quite some time, probably because it's the algorithm doesn't like choppiness. So if price is chopping around too much, it'll not generate a signal. There was a sell signal back here. It didn't trigger. Actually ultimately result in a big move down, but didn't trigger fast enough for the algorithm. And also didn't occur. You don't have the confluence of the parabolic SAR switch. Here was a buy signal. Using the parabolic SAR filter that we've focused on tonight would have kept you out of this buy signal, which was profitable on day one, but quickly reversed. So would have kept you out of that. There was a coinciding parabolic SAR here, although it came in one early. There was a pretty good move up. This one was not, that was a profitable trade trend trade, but signal, but it wasn't a parabolic SAR switch. Same thing there. Okay, here's an example of one I wouldn't take on a parabolic SAR switch because I touched on that with the Microns example. So see this one, this was on a switch. Oh, sorry, it was before a switch. Actually, this one probably wouldn't have even qualified because our entry would have been probably right around here above the high of the candle and the dot's way up here. So it wouldn't have resulted in a trigger or a switch in the parabolic SAR, but this one did because it gapped up way up and switched the SAR. But if it had qualified, I wouldn't take it because see how far the candle is from the dot. These are the ones you want to kind of try to avoid, these big gaps between the candle and the dot. Let's see here. Yeah, Amazon is very, very choppy. Okay, here's one, finally. See, switch, there's the dot switch, but see how much closer the candle is to the dot? That's what we want. That's what you want to look for. No good, much better. So there's the switch. The dot was below price action, switch to above, sell signal, boom, big move down. Picture perfect right there. This one was just a couple dots too early. A little too late, although that was on dot 2. You could have taken that one. A lot of chop here. But see how the parabolic SAR keeps you out of these. The algorithm picking up the direction is good. Like there's a buy signal and thing went way up, but it just wasn't quite timed well with, and then you got, 4 days of sideways movement on that. Wouldn't have taken this one, although it didn't trigger by the algorithm anyway, but below the SAR. Actually, I take that back. I would have taken that one because a trigger on the buy stop would have resulted in a switch in the parabolic SAR, but it didn't trigger and nor did the parabolic SAR switch. So I would have canceled my order out on that one after the next 3 candles. But yeah, I would have actually used that one, but no trigger. This buy signal is just a little late to the game, but at 3 dots into the switch. But still a nice signal. So yeah, you can see how the combination of trade trend and the parabolic SAR can keep you out of this chop. We wouldn't have taken any of these signals. It would have kept you from getting all chopped up in here on Amazon. This is really at this point, it's more advanced. This is a range trading strategy. I'd be selling iron condors all over this stock right now if I could get good ROI with a bear call spread above the high of this range and a bull put spread below the low of this range. It might be a bit wide for a good ROI, but that's more of a strategy that would be conducive to this type of price action. All right, we're coming up on the hour. Are there any others we want to look at before we wrap
Look
up?
at a CVX on a daily. And if you have time, a Forex pair for Danda.
Okay. Yeah, we'll do, what was it, CVX?
CVX on a daily.
Okay, we'll do CVX and then we'll look at a Forex pair and then we can wrap up. Yeah, this is, I like this. So this is Chevron. Really nice one here. Zoom in. All right, so we've got our parabolic switch. This is picture perfect because we get the switch on the sell signal. See, price is above the dot. Then the low of this candle exceeds the price point on the parabolic dot, and we get the switch. And that same day, we get a sell signal from trade trend. Boom. 10% move down. This would have been a 200% ROI on a put, buying it at the money put. So you put, you know, $5,000 into this trade, you come out with $10,000 in net profit. The previous, got a really long move here in Chevron. Holy cow. And it's also a parabolic SAR trade. Awesome. This is a great example. Here's the switch. Now the buy signal did come in early, but notice again, let me zoom in on this because it's important. Buy signal, notice that if we go up and hit the entry price, it would result in a switch in the parabolic SAR. So here it is. And we hit the entry price from the trade trend algo on the next day. We also get a parabolic SAR switch. And this is a massive move. And actually, this is a cool one because the trade trend algorithm and the parabolic SAR, actually, I'll brag a little bit here. The trade trend algorithm just slightly outperformed the parabolic SAR. That trailing stop exit was up at 110.40, parabolic SAR at 109.20. Not much difference, but this is a really cool one. Holy cow. So $90 a share was roughly the entry price. 110. So you picked up 20 points. You know, that's you know, over a 20% move from February, month and a half. Massive one. That's awesome. Good trade trend trade, but didn't coincide with parabolic SAR. This one did. Short 90 down to 83. Not bad. Here's another beautiful one. Buy signal, or buy stop order would have gone just right here where I've got my cursor above the high of the candle, which would have guaranteed, because there's a parabolic SAR dot right there, would have guaranteed a parabolic SAR switch on the buy trigger. Massive move. That was a good sell signal, but came in one dot late on the parabolic SAR. Surprised there's no signal there, but this one was really far. Okay, would have ignored this one because on the buy stop being above the high of this candle, it wouldn't have resulted in a parabolic SAR switch. We ultimately did get a switch, and this trade did move, you know, from the open 87 to a high to 93, moved significantly. 87 to 93 is 6 points, which is over 5%. This could have been 100% ROI on a buying a call option, an at the money call option, but still doesn't meet the criteria for the combo trade for parabolic SAR and trade trend. Nor does that one. Nor does that one. Nor that one. But yeah, there was some really nice, man, this two really beautiful, huge trades. I mean, caught this 20% move up, which is awesome. All right, so clear these out and we'll look. And what Forex pair did Dave want? Was it Dave or Dan that wanted to look at it?
So Dan, he wanted to look at earlier he mentioned you can do like the euro dollar.
Okay. So yeah, there's actually on a daily time frame or any specific time frame.
He didn't say. I would go with daily.
Okay. So yeah, in a short trade now on a parabolic SAR switch on the euro dollar. So see, there's the switch. Below price switches to above price, sell signal. This is already making a nice move. So the suggested entry was 1.1834. We're down at 1.1775. So it's picked up, what is that? You know, about 100 or let's see, 25, 75 pips so far on that one. Zoom back out. Ooh, beautiful. There it is. Parabolic SAR switch. Dot below. Switch to above. Sell signal on that same dot. Massive move down. Here's a buy. On the parabolic SAR switch. Nice move up. Oh yeah. Sell signal, parabolic SAR switch. Massive move down. See? Don't take this trade. It's a buy signal. It did trigger, but it didn't follow through because we're below parabolic SAR. There was a continuation sell signal. So you can use these to add to a position, but this far into the parabolic SAR switch, I wouldn't have personally. This is a nice trade trend buy signal, but it was 3 dots into the so there's 3 dots into the switch. If you're going to use the 2 cutoff rule, you wouldn't have taken that. Here's one. It's a bit far from the parabolic SAR dot. I'd like to see it a little bit closer, but this was a buy signal on the switch that resulted in a huge move. Sell signal. This again is too far for me, but still would have been a nice trade. So yeah, I'm seeing a lot of nice opportunities. Ooh, look at this one. Up, came in too early. A lot of nice opportunities on the euro dollar. This wouldn't have, using the parabolic SAR filter wouldn't have qualified, but it was a beautiful trade trend trade that did trigger July 1st. This one qualified.
Maybe helpful. Whenever, let's say you are looking at a daily chart and you see this setup come with the parabolic SAR switch and you've got everything lined up with trade trend, would you typically do like let's say you can do options, would you do a at the money call, and what would you do, like a 2-month expiration is what he's asking? Or?
Yeah. So if you want to use options to do this, let me go back over to let's go just back to like just go back to Micron, I guess. So yeah, let's do this as an exercise, and then we'll wrap it up. So let's look at this one on November 5th. Okay, so here is the picture perfect buy signal with the parabolic switch, November 5th. If we wanted to buy a call option off of the switch and the signal, I would use a strike that is near the trade trend algorithm suggested entry price, which is up here on the left if you're using Thinkorswim. Vary by platform, but I would use a strike near the entry price or just kind of near the high of that candle. So here we would have bought a roughly a 55 strike call, because that would have been about our entry price on this signal, 55. Now and to do that, if you don't, we're kind of running over tonight, so you can go in the members area and watch past sessions where we demonstrate how to do contingent options orders, but you can enter a future contingent options order that says, I only want to buy the 55 strike calls if the underlying stock, in this case, Micron, trades up to that price. If it doesn't, then you don't buy the calls. And that way you can kind of automate it that way if you're not able to sit at your computer and watch it. But check out our past videos. We explain how to do that. And also you can check with your broker to figure that out. But let's look at what happened on this one. So yeah, I would normally go buying. If you're going to buy options, I go like 30 to 60 days out in expiration. So this one was on November 5th. Let's back test this. Give me 1 second. I gotta get some water. I'm losing my voice here. Okay, so
Tonight, I was going to say while you were getting your water.
what's that?
I was going to say thanks everybody for all your questions tonight. It's been a really good session.
Oh yeah. Oops. Let's do a think back. I think we can do that in here in the demo. Yeah. Okay, so let's go back to November 5th. I'm just going to run a back test on that one signal. So November 5th, we would have entered our contingent order where if price trades up to 55, we want to buy a 55 strike call 30 to 60 days out. So let's see how long that move was. So it got us out on December 9th. So let's just say we went out to the December expiration, monthly expiration, and we bought a 55 call. Okay, so at that time on November 5th, we would have paid $279 per contract. So if we traded 10 contracts on that one signal, the investment would be $2,795. Now, let's see how this one played out. Where we would want to exit the call is either using what the strategy I told you before, using the trade trend trailing stop or the parabolic SAR, or a combination of the two in scaling out of the contracts. So let's fast forward to December 9th when that trade exited. See what happened. So your investment of $2,795 would have resulted in a profit of $13,680. So that's a huge return on investment on that one signal. You just made over 5 times your money, or almost 5 times your money, over 4 times your money.
Plus.
What's that?
You give yourself a good month plus just to be safe.
Yeah, minimum 30 days to expiration. Because remember, guys, the point of using the parabolic SAR with trade trend is to capture the bigger moves. So those tend to play out over a bit more time on a daily chart. So buying options on these signals on a daily chart, I would use minimum 30 days to expiration, maximum 60. All right. Well, thanks everybody for joining tonight. It's good timing because I'm about to lose my voice. I've been on the phone all day and doing this. So yeah, really appreciate everybody's participation. The recording will be up in the members area, right, Richard?
Yeah, tonight. Give us a couple, like 3 hours or so. It takes time to process.
Yeah, so by tomorrow, it'll be up in the members area for you guys to review. And thanks everybody. Thanks, Carrie. Thanks, Scott. Thanks, everybody. Great crowd. Thanks for the turnout. Get some tea. All right, I will. All right. Talk to you guys soon. We'll let you know when the next session is. Have a great Friday and a great weekend, and we'll see you guys all soon.